Hey everyone. So Intel's been doing a great deal of restructuring and repositioning its business for the next phase of its strategy. And I thought I'd go through why they've been doing that and different product segments and what it could mean for Intel stock investors. So let's take a look at these details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Intel CEO saying that the separating of the internal financial reporting between Intel Foundry and Intel products was a critical step needed to provide transparency, accountability, and the proper incentives to allow both groups to make better decisions to optimize their own cost structures. And generally, I agree with these kinds of transitions, especially with the big strategic changes that Intel is undergoing. It does give investors more transparency into how each individual business segment is doing, and their internal reporting allows for the teams within the company to understand their roles and to get paid based on the performance of their specific unit or their specific team. So, in general, I do agree with these changes so long as it doesn't happen frequently. You shouldn't be doing these big, massive restructurings every 2 or 3 years. If it's once every decade or once every 6 or 7 years, that's understandable. But if you need to do this every 2 or 3 years, it's a little much for investors to digest these big changes. It's distracting, it takes away energy, and it costs money to do these restructurings. So once in a while, like Intel is doing, it's understandable. And we're going to get an explanation here as to why they did that is because of what the CEO is stating here. So the CEO goes on to say that Intel products, they have a solid fabless franchise. It's solidly profitable business today despite the recent emerging from semiconductor downturn, right? The semiconductor industry went into a cyclical downturn in late 2022 and all of 2023 as consumer behavior shifted rapidly. During the pandemic, people were buying electronics in vast quantities, more so than usual. And then in 2022, when economies reopened, people were spending considerably more money on services, things like travel, eating out, going to bars, and that's been more so than usual. So our economy worldwide and in the US especially went through rapid, unprecedented changes and shifts in 2020, shifting the way we spend our money and time because of the pandemic. And that's been the case all the way through now. Is the economy is still imbalanced. It's not back to normal. It was way too much spending on goods in 2020, 2021. Well, more so than usual, more spending on electronics. And then in 2022, 2023, and even now in 2024, it's way more than usual spending on services, things like going out to eat, travel, bars, theme parks, concerts. That's been an imbalance. So the economy has been in an imbalance for going 4 years now. And it remains to be seen when we'll get back to normalized spending between goods and services. Now, I'm forecasting that happens sometime in 2025. It could take much longer than that as people unleash this pent up demand to get out of the house and people purchase these goods, and these goods are long lasting. Computers, tablets, phones, refrigerators, appliances, these things last several years. So if you bought them in 2020 and 2021, you're probably not going to need to buy them again for several years, depending on the type of electronic you bought. So this imbalance persists, and Intel's been hurt with that. The semiconductor industry has been hurt, but they expect and they see a rebound. They expect that rebound is happening, and Intel goes on to say that within client, they are defining and leading the AI personal computer category, and IDC indicates that overall PC market is now expanding. So it's returning to growth after it contracted in 2023. Intel sees demand improving, especially in the second half of the year, helped by a corporate refresh Now, those computers that were purchased by corporations in 2020 and 2021 and individuals in 2020 and 2021, they now need to be replaced. And that replacement cycle is what's starting in 2024 in the second half, and that's going to accelerate in 2025. Computers largely average 4 to 6 years. Some of you might use it longer, some of you less than that. And so 2024 is going to begin that refresh cycle. It's the beginning of the refresh of computers that were purchased in 2020. And in 2025, that will accelerate, and that's what Intel is seeing, and that's what Intel is telling investors. So later this year, it will allow them to ship in excess of their original estimate, where they initially thought they were going to ship 40 million AI-enabled computers in 2024. They're going to exceed that expectation. Next year, with their next product, Panther Lake, they will extend their lead with Intel 18A and further product enhancements. So things are starting to recover in the second half of 2024, and Intel expects that to accelerate in 2025. The CEO goes on to elaborate on data center and AI group. As committed, they have achieved product release on their first Intel 3 server product. They expect share trends to stabilize this year and improve in 2025. Customer conversations continue to show improving signs for traditional server CPUs starting in late second quarter and into the second half. And their Clearwater Forest is slated to launch next year and will allow us to accelerate share gains. Now, most of the investments in data centers and artificial intelligence have gone to GPUs and not CPUs, and Intel will benefit when the spending normalizes between CPU and GPU again, and that's what Intel is forecasting, and that's what Intel is expecting based on the conversations they're having with clients. They're seeing clients more interested in CPUs in the second half of this year, and then going into 2025 even more so. So that's another sign of good news for Intel's rebound in 2025. And finally, their Gaudi 3 launch gives them strong offering to improve their position in accelerated computing for the data center and cloud. This is the GPU Intel is offering to compete with NVIDIA. So they now expect over 500 million in accelerator revenue in the second half of 2024, increasing again in 2025. And they believe the Gaudi 3 has vastly superior total cost of ownership compared to what's existent in the market today. And they're going to expand their own supply based on the demand they're seeing in the marketplace. So Intel starting to see the signs of a recovery in their existing product roadmap, and then their new products, their new innovations are starting to gain traction, and they're starting to see more demand for that in the second half of this year and then expanding into 2025. So Intel's investments and their product category, their roadmap, their restructuring is starting to pay off, although it's just in the beginning stages. Investors want to see more of this progress from Intel. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.